You don't know off the top of your head? I thought you knew everything.
I know a lot. No. No.
Not everything, but I do know a lot.
I do know a lot, but everything is, I would not say everything, no.
Oh, a little bit of humbleness from Bob,
Just a little.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Path Trading Partners presents the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. Today's show is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So we've just come off the market crash, or maybe just a correction. You know, Bob and Mike have a lot to say about what's happening in the markets, so let's get right to it. Should just say market crash and analysis. Go.
Market crash. No, there's no crash. It was just a very big dip to buy.
It was a correction. Again, the correction everyone was looking for. But then once it happened, oh my God, what's happening? Idiots.
And we're back to the same levels we were trading at the beginning of the year.
Yeah, we're up on the year again.
Yeah. Actually, the second we were trading, we opened right around, and I'm looking at the S&P futures. So let's just call it 2675. We closed that day right around 2700. Well, right now we're trading 2736.
Yeah.
But you think the world now? What's interesting is I wonder if that qualifies. We did trigger yesterday a massive double bottom in the futures.
I saw that. And actually, I was going to ask you about that. I don't know if you had measured it out or not, because I had not. Yeah, but I saw that building. Remember, I tried to tell you that there was a double top, but it actually was double bottom, and I was wrong. I misspoke. I'm not saying, I just misspoke. At this
That's
stage,
actually funny.
At this stage, I should know the difference, right?
All right, this is so funny. This is so funny. You know how we use the first target takes us. All right, what was the open on before this massive correction? 28.74.25. All right, then this is the 75% target.
Wait, start over, because you jumped to levels without explaining to people what you're doing.
I don't want to start. Don't tell me what to do, Mr. Iacchino. You're already telling me what to. Don't trigger me, man.
You triggered.
Do it.
You're such a snowflake. Stafford, we're dealing with a snowflake.
Hold it together, Mike. Hold it.
I gotta hodl it.
Hodl it together.
Okay, actually, in the body of the candles, the close. All right, this is for the. I zoomed in my chart. I have to make sure if it's triggered or if it's. Oh, I hate this damn Thinkorswim platform now. All right, this is triggered yesterday. I'd be watching for another pullback before entering it. But the how we look for the target has to be in the bodies of the candles.
Yeah.
And if people want more information, just look. There's doubles videos on our YouTube channel. They might be in cryptos, but they're the same. It doesn't really matter. It's the same pattern. You'll see exactly what I mean. Maybe I'll do a video on this at some point. But the body of the candle was 28.74.50. The first target is 28.75. I'm calling it exactly to the top. That's
totally
a rounding error. So it would have a one target trade of 28.75 we could just go with 28.7450. I'm not going to mince it over 50 cents, but this is on a daily basis. So this would be returning to the prior highs, at least in the S&P futures.
So we, as a firm, have 28.7450. Is that what you said?
28.7450
as our target.
As our target. Now, I would expect.
Is that in the futures or the cash?
That's in the futures.
Because the cash one to me looks like it in the right hand low might have exceeded, but I'm just doing it visually. Here, I'll draw it right now. You can do other things. I'll measure it.
What am I going to do? Yeah, the cash would have exceeded the would not be a valid one.
Right, and the funny thing about that, so if any of you have taken our doubles course, why would the cash be not a valid one and the futures be a valid one? And there's actually a fundamental explanation for it. That's because the cash has an upward bias. So in other words, if we went and seeked out the cash and measured, we would probably have different parameters. But Mike did the research on the futures. Now, having said that,
the futures trade longer than the cash. Remember, the cash
trade
does
overnight.
Not trade overnight. So the futures traded. They traded all but 15 minutes or something.
Right, and therefore the cash has a tendency the moves tend to be exaggerated. So if the futures reach its target, obviously the cash will too. But just the pattern needs to be measured out in the futures because it's just a more reliable set of data. There's more data because it trades longer. And again, because the cash tends to have retail in it. The futures do too, but the cash tends to have retail. There's programs in it. There's things that can't trade overnight that once they trigger overnight in the futures, they have to dump in the cash. There's more two-way trade in the futures because futures are also used for hedging. You can't really hedge in the S&P cash. So it's just a more reliable metric.
Now, what's interesting for the pattern to trigger, and it is in the Dow futures, we need a close above 25,239. The close yesterday was 25,250. So it did trigger in the futures for the Dow also.
Okay. So we've got upside targets. Actually, what's the percentage, Mike? Give me the two numbers. We'll figure out the percentage.
For the...
what?
Okay, from where it triggered?
Sure, from where it is now. From where it is now to where
it's future 2730. We'll just call it 2730 where it is right now, and the first target is 2874.50, or the only target.
2730 divided by 2730. So we're looking for about 5% up on both. I'm assuming the Dow's about the same.
Yeah, it's roughly. I don't need to work it all out now.
No, because so this is going to sound like I'm the superstar or something. Clearly I'm not. I'm going to go on TV. If I go on TV, the next says, what are you expecting? Let's say 5% higher on both.
See, people will be wowed and amazed. They'll be like, listen to Mr. Iacchino.
I am the big fiery head, and Mike is behind the curtain with the wheels. Turning all the wheels and talk.
Did you say you're a big flaming head?
I'm a big flaming head, yes.
That's probably the most apt description I've ever heard about you.
I love that description. That's going to be my new Facebook page, the Flaming Head.
The Flaming Head Facebook page. I wonder what kind of people will follow you just based off the name. I'd be very, very worried. Well, and why do we have targets for doubles?
Well, a very good example, Mike, would be your Tesla trade. When we have measured move targets, we are trying to take portions out of a move that are high probability based on our research. So we don't care if something moves from 1 to 1,000 as long as we get to trade from 100 to 300 in the middle of it. We want high probability trades. Now, when we have a measured move target, which again is based on our research, we will always exit at the target. The very least we'll do is trail a stop, so as not to turn a winner into a loser. Again, because these measured move targets are high probability. We have no call for what a market's going to do once it reaches a target. So we exit or work with trailing stops.
Yep, like it did with Tesla.
Mike, did you have a Tesla call?
I did. And if Thinkorswim would work anymore for me.
Well, somebody could just go to our Path Trading Partners YouTube channel to see the Tesla trade if they wanted to.
Try Plenty of Fish, Mike. Try that. Plenty of Fish.
Huh?
Wait, what aquarium website are we talking about?
Aquarium.
I'm not an Aquarius.
Bitcoin is back. All right,
Hold on, I got to go through my Tesla stuff. I get to be a big flaming head too. What was interesting is the full target. We had the two target, the higher probability one, and then the secondary target because it cut into the wicks. The secondary target, which you take and this one you take off the majority with the first target at 317, and then the second target was 310.92. It closed that day when it hit the target at 310.42. It dipped down below that, but then it snapped back into the massive rally into close. Now where is it? 336.32, above where it triggered. This is why you don't just go. Yes, you don't just go. But what am I leaving on the table, Bob? What if I'm leaving it on the table or the floor?
Well, it's just crazy.
Don't you love when people say that? Look what you left on the table.
Look at all the money you left on the table. I have said this before. I will say it again and again and again and again. The money is not left on the table. Okay? It's money that's not yours. If you have a target in a trade and that trade is high probability, I can count on one hand in 20... How long have we been doing this now, Mike? How long have you been doing it?
Since 92.
So how many years is that? 25?
I can get 20. Okay, so I'm closing in on 26.
All right, so I'm closing in on 25 then. You essentially, I can count on one hand the amount of times I bought the low and sold the high, or sold the high and bought the low. You just don't do it that often. So what you're looking at is when you can get a high probability trade and your target is measured and researched, you either exit on your target, or as we've said in a lot of our lessons and things we do, is that a target is a place where you take an action. And if that means your action, you've decided that your action is going to be a trailing stop, that's fine. But do not be mired in inaction, because that's when you just get wiped out of something that was a really nice trade.
We talk about that all the time in the cryptos because we're always on our YouTube channel putting up levels, and it doesn't mean you have to take something off, but I tend to reiterate all the time, you should at least be moving up your stop when these key levels are hit. Right. You should know where your stop is, so if it does turn back down, and you get another substantial drop, you're not sitting there going, uh-oh, what'd I do? I'm just going to hodl it now. I'm going to hodl it.
Now you just got to hodl.
Yeah, you turned it from a trade into a hodl. So, which is not something we recommend because you could be hodling it for a very long time. Right. I seem to remember we had one of the students at one time that they was in forex, or I'll say the forex.
The forex.
The forex. Remember they were, I forget, it was like Aussie Japanese yen, and they're just, I
remember this well.
I don't remember the details, but it's like they're waiting, and it kept going against them. They kept going in, and then they're coming. When's it going to go back down? Well,
yeah, this particular person said, I took your trade, and it went to the stop, but I didn't cover. So when is it coming back? And I remember saying to the person via chat, I'm like, what trade? Like the Aussie yen trade. I'm like, that was like 8 months ago. Yeah, I'm still holding it. Well, it's moved like 900% further than where the stop we recommended was. Why are you still in that? Yeah, I just didn't want to lose the money. So now you've lost way more? It's insanity sometimes what people will do.
We never want our stops to be hit, but if they're hit, you okay, get out. And so not all stops are for you. We trail a lot of stops too. You could have a stop hit that locks in a profit. It just means it's time to be out of that trade. It's done.
Right.
Yes, but the young whippersnappers want to believe that cryptocurrencies on unregulated markets and exchanges are a store of value. So don't take that away from them. It's a store of value. It's like Pikachu.
This particular example was actually was like a woman in her 50s, and one of the things she was saying is she didn't want to tell her husband about the loss. So,
well, now you got to tell him. You were originally going to lose like $500. Now you're going to lose like 20,000.
Yeah, exactly. That's exactly what the ratio was too. It was something very.
I mean, it was absurd. It was like what?
Mm-hmm. I know.
I just thought it would keep coming back.
It was really, really, really bad.
It didn't. It didn't come back. That's why, we make a lot of very good calls, but we're not. Nobody's 100%. If anybody says they're 100% in trading, they're lying. Mm-hmm. Or they're never taking anything off. Mm-hmm. And they're like, I haven't closed the position. It's not a loss until I close it. Okay, well, you've been losing in that trade for 17 years. Oh, boy. Oh, boy.
What am I going to do? What's up? That's BitConnect references. That's become the new Doge, is BitConnect.
Is that like a Doge coin?
1% a day lending platforms. 1% a day. With our trading bot.
You God, these people.
1% a day. That's like, there's been day trading courses like, all you need to do is make 1% a day. It's like, okay, there, buddy.
I had somebody approach me, and I won't say who it was because I actually like the person personally. This particular person is female, and this particular person represented a company that did gold for life. That's as close as I'll come to the actual name. And basically, in a private phone call, she said to me that she would like us to push their product, and they've been averaging about 18% a month. And it's verifiable. And I said, would you allow me then to present you to Goldman Sachs? Because you'll be able to make a lot more money, Goldman Sachs, than selling your course to people or selling your product to people. Yeah, we'll get back to you when that's something that we're do. Sure, that'd be great. Like, really? 18% a month? Let me help you turn that into $8 billion under management.
Yeah, you didn't even have to do, if you could routinely, in an ethical way, turn 2 to 3% a month consistently, you're going to be worth hundreds of millions of dollars.
This is verifiable.
Verifiable.
Like I'm sending you a chart. I have to email it.
I thought you were saying, I was all excited. I thought you were going to say check.
No, that I'm not doing.
I thought you were going to send me a check for like $100 million or something.
That I am not doing. I'm sending you a chart that I would like your opinion on, and it's coming via email. Go. It's been sent.
Meanwhile,
back at the ranch.
All right, I got your chart. BTC looks like the Bitcoin futures. Now, these are the fancy futures.
Mm-hmm.
What specifically do you want my opinion on?
Where do you think it has to close above below, or has it already, in order to continue its rally? It's just a daily.
I have those, based off, I do it why do you have the 161.8? I want the retracements on it from, I need the, I'll tell you, let me call it the futures.
This is on the Mac, so I have not reset those levels on the extension. Those are just the default.
Mike, are you getting on a protractor to do this technical analysis?
No, I'm getting on an Abacus.
That's funny.
Which reminds me of...
while you're doing that, Mike...
What would that be?
Reminds you of what? Go ahead.
That reminds me of a story. I was at the grocery store. One of my pet peeves is when somebody gets in like the X items or less and they have way more. So I was at the Mariano's in the 5 items or less thing. Okay,
there's a 5 items or less. That's that little guy that stands up in the thing. He kind of stands up in the produce area or by the food.
Yes.
Yeah.
All right, 5 items. So it's like if you're grabbing a couple things for lunch, you're getting your soup and a sandwich or something, and maybe you pick up, an apple and an orange. You're not going to go buy big things. So there's one lane left open. It's like at about 1:15. I'm trying to grab a late lunch. I was running some errands, and the guy literally. I'm walking towards this, and the guy cuts, he zips in there, and he's got a push cart. And literally, he had 18 items. And
like Rain Man, you look at a cart.
Well, it's not even close. No, I counted because I was.
Yeah, exactly. You just look down and you see that there are 15 poker chips.
It's like you wasn't even like 6 or 7. It was, and I'm counting them as he's pulling them out, and finally. He pulls out an Amazon Prime credit card thing. I'm like, oh, you're an Amazon. I'm staying right there. I'm pissed right now. I'm like, you're an Amazon member. So he goes, yeah. And I go, when you get home, make sure you go and you can order yourself an abacus. He goes, why? I said, so you can friggin' learn to count to 5, you moron. You have 18 things. He's just like, he just looks at me like, dude, you weren't even close. I was so pissed at this point. Sorry. It was like, So that was my little story. All right. After the last sell-off, and we closed above my key level in the futures, which was about 95.85. Let me try to zoom into my thinker. The platform that they ruined because they have programmers who don't know how to trade. It was. We needed to close about 95.80 in the futures, and in the cash, it was. Let's see, my Bitcoin cash based off the Bitfinex exchange was 98.68, which we closed above. That does not mean we won't have pullbacks. That just means we closed above the most critical level from a GAN perspective. That would say we were sort of out of the woods for major resistance, but I'm still expecting, as I said yesterday on the YouTube channel, that we're going to have a bigger pullback. But that should be a buying opportunity unless something changes at this point. Gotcha. But those are the 2 levels.
So Bitcoin, broad strokes, Bitcoin's probably a buying opportunity, but please pay attention to Pat Trading Partners YouTube channel to find out where that is incorrect. In other words, if it were to turn around and go down, where would you want to get out in order to not potentially absorb more losses like our Aussie Japanese yen woman?
Right. I mean, we could potentially, if we have a bigger pullback, easily pull back to 9,200 and still be now in a bullish pattern.
I want to talk about, if we could, can I talk about economic data a little bit?
Sure.
Because one of the things that, so I had a friend start listening to our podcast. He's sort of a coworker who's become a friend. And he said that he was very interested in the way that we do things, like the way that we combine trading terms with plain English. And I thought talking a little bit about the economic data that came out this week and kind of explaining why the markets reacted the way they did, even though we don't care because we just look at price action. But we had some pretty critical data this week. And one of them was CPI, which is the Consumer Price Index. And another was retail sales. And retail sales isn't always important. CPI generally is always important.
And we had PPI also, right?
We had PPI, but that's mattered less and less over the years.
Okay.
So let's start with PPI because that's the one that matters less and less. It's the Producer Price Index is what PPI stands for. So PPI is the cost of the inputs into industry. So for example, if rubber costs go higher, that's an input into a tire manufacturer's costs, right? Just for example. So that is a producer price. So producer prices went higher. The Producer Price Index, the final demand month over month was 0.4. It was expected at 0.4. The ex-food and energy PPI. Now, why would there be food and energy in producer prices? Well, obviously, energy goes into producing most things. You have to turn things on. You have to run trucks, etc. And food The cost of food for restaurants would be a good example. But ex-food and energy, because that tends to be more volatile, also up 0.4. That was much higher than expected. Now, year over year, producer prices on the headline, excuse me, is up 2.7. That was higher than expected. It was expected at 2.4. It was also higher than last, which was 2.6. And the ex-food and energy year over year was 2.2, similar situation, higher than expected, although this was slightly lower than the last reading. Now, those are considered lower level inflation gauges because producers can absorb those costs and not pass them on to consumers. But if that relationship gets too far out of hand, stock prices will fall because companies will be absorbing costs, not passing it on to consumer, and therefore their profits will be lower. So there's that. Then we have the U.S. CPI, which is the Consumer Price Index, what you and I pay for at the grocery store, on Amazon, automobiles, everything, right? And the U.S. Consumer Price Index month over month for January was up 0.5%. It was expected at up 0.3%. So a little bit hotter than expected. The ex-food and energy month over month was up 0.3% versus 0.2%. So also a little hotter than expected. And the most important two and the most watched, year over year and year over year ex-food and energy. The year over year was up 2.1% and it was expected up 1.9%. And the year over year, subtracting out volatile food and energy, up 1.8%, expected at 1.7%. So those were both a little higher than expected. Now, in the non-farm payrolls number we got last week, we saw a wage increase. Throughout history, the largest contributor to the cost of a product is wages to produce that product. Now, that is slowly going down with technology, but it's still the highest input. So in non-farm payrolls, we saw an increase in wages. That means an increase in the cost to produce goods. And here we see an increase being passed down to consumers. While it's slight, it still is an increase. So the CPI confirmed what people thought they'd be seeing from those wage increases. That's higher consumer prices. That wage increase is what caused the correction, because the wage increase caused yields to rise in the bond sector, and that caused people to reprice equities versus where the bonds are. What does that mean? How much money can you make owning stocks versus how much interest you get paid on bonds if you just put the money into bonds? That's why we reprice things when bond rates rise, because people could theoretically put their money in bonds and have a much safer return. All right, so that's all out of the way. But after that, we got retail sales. So you might wonder why, if consumer prices were higher, if inflation is coming, if yields are higher, which they still are higher, why did the market turn back around and rally? And it's because of the retail sales number we also saw on Wednesday. Retail sales was decidedly weaker. All right, now it might not look like it was super weak off of the headline numbers, but advanced retail sales was down 0.3 and it was expected to be up 0.2. Last it was unchanged. So not only did it miss the expectation, but it missed the expectation and turned negative. Ex to autos, it was supposed to be up 0.5 and it was flat. It was unchanged. And then what I find as somebody who digs through the data when I get a chance, I don't always get a chance to do it, but I did on this retail sales number, the control group was unchanged. Now, the U.S. retail sales control group is an interesting concept. The control group is the total industry sales that are used to prepare the price, oh God, I always forget what this, the PCE, the personal consumption expenditures. They use the retail sales control group to calculate the most important inflation indicator in our economy, and that's the PCE, the personal consumption expenditures. So when that control group is unchanged or lower, it really means that in the future, inflation probably is not going to show up any more than it already has. So that's really why things turned around and rallied. And when you go to the 10-year note yield, which hit a 4, was it a 4-year high or was it more than a 4-year high? I think it was more than a 4-year high. I think it was the highest level we've seen. Yeah, no, it was a 4-year high. No. Whatever. I don't know what high it was, but it was high.
That was very helpful, Bob.
It was high. All right, the 290, I think it was a 296 that we saw, or 291 somewhere, but it was close. It was 294. So it was close to 3%. And 3% is this level that everybody thinks is like this trigger for more equity selling. And we got to like 294 on that sucker. We're at 287 right now. So yields are still higher on the 10-year note, but they've calmed down because of this retail sales and that 0% change in the control group. So it looks like we got a temporary spike on consumer goods and a temporary spike on wages. The way the data looks right this second, which is not enough data, but the way the data looks right this second is that was a blip. And we're not looking at a rush of inflation coming down the pipeline. Thank you very much.
It was funny because there was a retweet I did from one of the guys I follow, and he the night before the CPI came out, and this is he tweeted, "I don't care what tomorrow's CPI report says. I just spent $7.99 for a goddamn Valentine's Day card. It's pretty big though. I'm rolling the dice on $8, hoping it gets me off the hook for flowers."
Well, it's really weird how people like how you price things. Like, for example, tomatoes are up like 18%. So if you're a pizza place, you're seeing producer price inflation, right? I mean, tomatoes up 18%, mushrooms up like 11%. But like energy for the particular quarter that was measured was down, right? Because we had gotten a little bit of a dip in oil. We're starting to get some lower cost electricity, things like that. So it's just a mix of things, right? I think for runaway inflation, we have to have less of that. And we've got to see some productivity increases or those wages will still go up. We saw 4 months in a row of productivity increases starting in August of last year, and then the last two were lower. So productivity actually went down on the last two numbers. So it's super interesting to watch the whole mix of data, but it's not, when you see people trade CPI, this is why we rely so much on price action. I can spend hours digging into the data, and Mike can look at the charts 5 minutes later and decide what we're doing. And by the time I'm done looking at the data, I'm agreeing with what he found on the charts for the most part. So it's just better this way.
By the way, you mentioned oil. The oil futures pulled back right to the bottom of the weekly rotation zone and rotated back up.
Wasn't there a double there too? I feel like there was a double in crude oil, but I don't remember.
I just think you got double.
I just looked for a double.
Yes, there was on the daily. The daily double did trigger back on the 6th of...
And it went to target, did it not?
And it went to full target. And it was a full target trade. And you're trying to piss me off. I should have just left my levels on my charts. See, it was silly me. I took them off. Here we go. I'm recreating it on the fly. The full target was 60.68. Now it went down. Wait, we didn't call the bottom. Mm-hmm. Sorry, but the full target was 60.68, which it hit like 2 days later, and now we're back up above the target at 61.55. So no, we didn't get to the very, very low, but look at that now. Hold on, I haven't looked at crude in a couple days, or at least yesterday I didn't look at it because I was having a lazy moment. It triggered a double bottom. Yesterday, it triggered a double bottom. Now it is a lower probability double bottom, slightly about 5 percentage points, because it is against the rotation zone on the daily, and this was a daily trade. Mm-hmm. But it's already rallied up from where it is. The stop reduction target would be 62.22, and it would be a full one target trade going back to 63.62. So there you go. If you need a crude call, there you have one.
What's interesting, rig counts. We're up. Rig counts were released. We're doing this podcast a little bit later than we normally do, and we got a 7 rig increase out of Baker Hughes in the oil rig quadrant. We are now above. I've been on record as saying that rigs really had not moved since November, and they had. I mean, for the most part, we saw a couple of peaks and valleys here and there, but the peak rig count was about 768 in oil rigs, and that was November 8th of last year. And now, for the first time since then, we have 2 numbers in a row where we're above that level, and quite a bit. I mean, again, we hit 768, and then on counts on February 2nd, we're 765, and then now we hit 791, and we're 798 since then. So some decent-sized jumps the last couple of weeks in oil rig counts.
I think it's all rigged.
You think it's rigged? The rig counts are rigged? The rig counts are rigged.
No, I'm just kidding. I don't actually think that. It just
don't
good.
read too much into the jump. The jump from 765 to 791 that happened a week ago, that there's a revision. That 765 was revised. So do get revised when the final counts come through. The jumps look a little bit more dramatic than they were at the time that they were released. So it's a little bit interesting to me that crude oil is still higher today, because that's weeks in a row now. And we seem to have broken out a little bit on rig counts, which, by the way, you can chart this kind of stuff, and you can find patterns in this kind of stuff as well. All of this stuff is basically behavioral economics put into price.
Very impressive. You know,
I'm a little bit surprised at the jump. I need to dig down and see why we've jumped like we are.
Why did Chipotle jump?
I don't want to spoil you guys.
Why did Chipotle jump this week?
They brought Taco Bell's former head guy in as their CEO.
That just struck me as weird.
But it's the guy that's responsible for the chalupa and the nacho fries and chicken taco shell, whatever that was. The guy who's responsible for all that stuff is now at Chipotle as the CEO.
I believe
it's the CEO.
That guy ruined a lot of shows, a lot of episodes of the Money Path podcast. That guy.
Have we tried the nacho fries yet?
No. And it's not your fault. It's not your fault.
God, those mic jokes. I swear, I hear people clicking the podcast off every time one of those joke comes out.
Yeah, it's the drop the mic jokes.
We're going to drop mic.
No, that's just mean. You know, I have to contribute in some way, and bad humor is the only thing I know.
Elon or cryptos or whatever.
We are. So, I mean, there's not much new news in cryptos besides the recovery, which, right. And if people want the more up-to-date stuff, then they just have to go to the YouTube channel and see. They'll pretty much get the gist of, do we think cryptos are going higher than or lower? So, I mean, everybody's waiting for the Monero fork. We're going to get
a Monero fork.
We're going to get a new version of Monero. Monero.
By the way, this Litecoin Cash is ridiculous. There was a reason for Bitcoin Cash. Litecoin Cash is just another Litecoin.
Litecoin is Litecoin Cash. Litecoin is Litecoin Cash. Litecoin is very light. It is supposed to be.
Exactly. So they're just putting another one. They're putting the name Litecoin, and it's not associated with the Litecoin people. It's just like, we're going to copy Litecoin and call it Litecoin Cash.
Yeah.
I have a scum report update.
All right, let's hear the scum report.
Okay, with Texas being the spearhead of the initial cease and desists, the initial scum is out of the pool. Almost all of the YouTube channels that were selling, scam crypto lifestyle, they've all shut themselves off. And it seems that the refocus now about, hey, do live the crypto life, it's actually starting to turn toward trading and not being wrapped up in one of these scams. No, that's good. It's I think
it's good for us.
I think it reveals what the government said in that congressional hearing, where we just have to get the criminals out of this activity and unregulate my niece who thinks that Bitcoin is a store of value.
Let me know when you want me to get on the phone with her or something, would you?
Well, hold on. In other news, did you see that Arizona, Wyoming, and Colorado are all looking at passing state legislation to allow cryptocurrencies to be more mainstream? Like, you could pay your taxes. There would be state taxes, of course, not federal taxes, but some of it would be you could pay your state taxes with Bitcoin. So that's been one of the arguments. You can't pay your taxes with cryptocurrencies. Well, if a couple of states have their way, it looks like you might be getting to pay your taxes with Bitcoin.
What state's doing that?
Arizona was the first one, but now Wyoming and Colorado are also talking about doing it.
Wow. I just went to pull up something on YouTube that I wanted to glance at for the podcast, and pops up in the middle of my screen, buy Ripple with an IRA.
Oh, no.
Yeah, I mean,
no, not in a retirement. I mean, no, not in a retirement. That's a speculative investment.
Yeah, everybody listen. Mike and I in Stafford, we are blockchain believers. We love cryptocurrencies. We are not like global warming deniers. We are not like crypto deniers. But you guys got to know what this is. This is high risk, high reward stuff, just like shorting the VIX was. Just like the triple-digit winners who were shorting the volatility index 2, 3, 4 years, they made 100 and some odd % a year. They blow up in 2 days. It's the same thing. When you get things that have this much reward, you cannot exercise the risk from that reward.
Well, it's like triple leveraged ETFs, right? They don't belong in a retirement account either. You don't do triple leveraged NASDAQ ETF in your retirement account. You do it in a speculative account, and you set aside that money, and that money could go poof in some way, shape, or form.
You take your money that you wanted to take a trip to the Florida Keys on, and you trade that money trying to turn it into a trip to New Zealand. And you know that if you lose it all, you just can't go to the Keys this year. That's it.
Yeah, well, cryptocurrencies is like swimming in the kiddie pool. If I have to go in, I'm going to get out as fast as possible.
Thank you.
Why?
Because they pee in the pool.
Oh, you're saying people are peeing in the cryptocurrency pool?
There's a lot of piss in that pool.
By the way,
piss in that pool.
You mentioned Litecoin, which that's been one of the stronger ones. It's interesting because the day before it really exploded higher on our video, I said, this one's looking like one of the stronger ones, and then it goes boom. But now we have a potential double top in Litecoin. I'll have to do a video on this. It only triggers on a close below 207, and right now the rotation zone is still technically in the way, but the bottom of the rotation zone is 204, so it could be out of the way by the time it triples, and that could possibly mean a pullback to, if it were to hit all the targets, 177. And where would that put it on my daily analysis? 177 would be right at the bottom of the daily rotation zone. So I'd go to the 185 target, which is right in the middle of the rotation zone if this thing were to trigger. And on the daily, top of the rotation zone is coming in at the stop production level.
Wow.
Funny enough how all this, these cryptos, what I love about them is they trade so technically. It's like one of the best technically trading, the way we trade. You know,
it really is.
Nerd.
Huh?
Nerds.
And my final thing then is Elon Musk promises Model 3 safety changes after crash report, because somebody posted on Reddit. You know, they the Model 3. They showed a picture of it. It was pretty mangled. But what was interesting is the car actually survived quite well. I'd like to see all the crash tests, because even the Model S and the Model X had pretty decent crash test results. But it was mangled. What was interesting is that one screen in the middle, his arms in the crash, the airbag got him, but his arm slammed against the screen and it shattered, slicing open his arm. So Elon's saying that they might look to put a protective coating on it. So, you know, like, if it breaks, you know, you don't get glass shards embedded in you. And also, you could only open the glove box via the touch screen. Well, the touch screen was shattered. So the police and everything show up, and he has to they get him out of the car and everything and bandaging him up. But they're like, we need your insurance and registration. And he couldn't get in the glove box because...
Wow.
They had to pry open the glove box because there's no manual way to release the glove box. And the screen's now broken. The screen, which pretty much controls everything. If that thing breaks in a Model 3, you are screwed. Like, if you're driving down the highway and something happens to your screen, you can't even operate your wipers properly, which I think is pretty dangerous. But so now Elon's also saying, when the car crashes, we're going to do a software update. When the car crashes, your glove box is going to automatically open for you.
So there you go.
So Elon to the rescue. Yay.
Yeah, he's...
And final thing?
They're going to put they should put a flamethrower in the Model 3 so you can pull it out and burn it open.
I wonder if if he's going to give that guy a free flamethrower or something. Which is, I was looking at these flamethrowers a little more. All they are roofing torches with plastic on it that say Boring Company. Like, you could literally go buy a roofing torch, hell of a lot cheaper than the $500 they're charging. You just wouldn't have the fancy plastic around it.
Is that all he was charging? Is $500? I thought it was a lot more than that.
Wait, did those come from Solar City? And now that the roofing company is melted down, they got leftover flamethrowers to melt tar?
Well, no. See, Solar City, they're gonna have the solar roof tiles, which, remarkably enough, I don't recall any information or news about. But
no, they're vaporware. They're vaporware.
Exactly, but maybe they should convert their roofing stuff to physical tar roofs, and then they could use their flamethrowers to help lay down their new roofs.
Don't look now, but the VIX is up 7.5%.
What?
Don't look now, but the VIX is up 7.5%.
Wait, I tripled down.
You could look now.
I tripled down.
It's back above 20.
Oh no!
Back above 20.
Oh, I bet I put it in my IRA. The triple leverage fix. Well, I got one final thing before you have to go.
What's up?
Anything from Powell this week?
No.
No? Well, there his couple quoes. You know, he's the new Fed chief, right? New Fed chair.
New Fed chair.
We will remain alert to financial stability risks and, quote, we explain our actions to the public. We listen to feedback and give serious consideration to possibly that we might be getting something wrong. I like that quote from him this week.
Say the quote again.
We explain our actions to the public. We listen to feedback and give serious consideration to the possibility that we might be getting something wrong.
Okay, that was Thank you.
There we go. That's the
Thank you for that, Jerome J.
That's all I have on the Powell front.
It's time now that he has officially been the Fed chair for a little under a month. It's time to stop calling him Jerome J. and just call him Jay. Jay Powell, that is his chosen name. And if you get to pick your gender, you certainly get to pick your nickname. That should probably not be in the show. But the probability of a rate hike at the next meeting, which would be the March 21st meeting, has gone up to 81%. It was about 70 last week.
81%.
It's getting near that area where it's getting near that area. It's getting near that area where I would say it's a done deal. It's not there yet. We get into the 90s and it's a done deal.
Okay. So when we all put on our Pearl Jam record, we can...
There's another one of those jokes.
What?
Drop the mic!
I think that means kick me off the podcast. Drop the mic.
Let's end the podcast.
And he's
all right, guys. And I am Bob Iacchino. Thanks for listening. Talk to you next week.
And I'm Mike Arnold. Talk to you soon. Bye for now.